Welcome, LinkedIn, YouTube, and Twitter to Showcase Live, which is all about having professionals within their respective industries share their ideas, insights, and strategies. My name is Michael Wardy. I'm a certified financial planner and regional director at Source Advisors, and thank you for joining. To our audience, if you have questions or comments or want to applaud, please do. We always welcome that. And for your questions and comments, feel free to share them. We will post those as long as they are appropriate. But today I want to welcome Adam Tkaczuk to our broadcast.
Thank you, Michael. I appreciate you having me.
Absolutely, Adam. And Adam, we've known each other for quite a few years now. So I'm excited that this worked out and we have the opportunity to talk about something specific. And for those in the audience that have not heard of this or seen this report, 8 Ways to Minimize Taxes When You're Selling Your Business, this is a great read with great insight and information that if you are in the process, have not, or are thinking about selling your business, you need to pick this up, and we'll have the links and everything for you to get this information and read the report. I apologize for going off on a tangent right now, Adam, but just to get started, and I have to ask, and this is something that if you don't follow Adam on Twitter, and I apologize, I don't know if I apologize for doing this to you, but if you follow Adam on Twitter, he posted a really funny story that I called him and I had to ask him about it, and I want you to share. Just start out. Share your story about the beaver.
Yeah, so I have a beaver story, and so this last weekend, my son, who's 5 years old, wanted to go ice fishing, and we live on a lake and we have a dock. So I'm like, we're not going to catch anything. I don't have the right equipment. But we went out, we took an oar and banged it through the ice and put our poles in, and we're fishing. And my wife came out to film it because it's a family thing, right? And suddenly this beaver starts swimming around us, and we're like, oh, that's pretty cute. And it comes up on top of the ice and crashes through, comes up and crashes through. And he's coming closer to the dock and then dives under the dock. He's hanging around us. Oh, this is nice. It's like wildlife. So we get off the dock, my wife with her video camera, and the ice iced over, so there's only a few pieces come up for air, and we ticked it off, or it had bees or something, but it's coming up, following it. It climbs out of the water, and it's like Godzilla coming up onto Tokyo. It's huge. You'd think beavers are the size of like a cat or a little dog or something. You can pick them up and, you YouTube them and they look all cute and people think they're nice. Well, this thing's coming out and he's like a nuclear beaver. He must weigh, Wikipedia says they weigh about 70 pounds, up to fat ones get to be 100. So imagine a 100-pound thing coming out, maybe not that big. It's good 50, 60 pounds. And it starts like lunging at me, going like this. And I'm like, whoa, get back. Hey. My son and daughter, my wife and son run off, and I'm stuck here. It's pushing me back against the house. I'm running back, and I don't want to like turn around. It's going to bite me in the heels, and they've got teeth that take trees down. And I'm thinking the thing has rabies. I don't want to spend the weekend in the hospital getting a rabies protocol. So he backs me up to the house, and I'm screaming at the thing, and I finally kick it in the head, and it turns around, and like I defeat the monster, and it goes back into the water. So public service announcement: beavers, careful, don't mess with them. I never will again, I don't think.
You did not cause any permanent damage to the beaver. There was no harm or abuse in the filming of this because your wife did film this, right?
Yeah, it's just the whole family screaming and like blurry, shaky camera. And at one point you see a beaver pass through the screen. And I mean, is
there any chance that could be posted on YouTube, or do we delete it?
With my wife, I might get a part of it out. I've never heard this before. Half of it is her screaming and me screaming, and it's not exactly flattering. I mean, I'd like to think I could have been a little more. Well, my recollection might change over time, and that may not align with what I would hope I had reacted with. Anyway, the thing jumped out. I got scared, and anyway, maybe not. I don't think so. Thinking about it, Michael, no.
Okay, that's fair. If I don't ask, I don't get. So at least I got the answer. Okay, so Thank you for sharing that story. I think I'm going to start trying to do this with some other guests, having them share a funny story, because that was great. Obviously, that's not the purpose of today's broadcast. Again, it is all about this right here. If you can't see it, I'll put it up there. 8 ways to minimize taxes when selling a business. Adam, you wrote this piece, and so we want to go through this and learn about this. But before we do that, can you just introduce yourself to the audience?
Sure. So other than beavers, I've been a tax consultant. I've been a tax consultant for the last 15 years, and it's been a very specialized area of tax, predominantly helping subsidize business growth, relocation, site selection. So the kind of things I'll do is help like a real estate developer put together a multi-block project and perhaps find ways that the federal, state, and local government can subsidize that project or help businesses grow and expand. I've got a number of articles you can find on my website that talk about that. But a few years ago, I co-invested and co-founded in a business that was started by a former client of mine. And he had been successful in the food processing industry. And it was a great opportunity to go from being a consultant on one side of the table to becoming an actual business owner and operator of a business. And that has gone very, very well. We are in the Philadelphia area. We're distributing our products across the country. We're almost maxed out on the first line, looking to expand. And it's been a fun ride and very, very just rewarding in many ways. Mm-hmm. And along those lines, I got in touch with a private equity group called Ventoux Industrial Holdings. And they asked me to become one of their partners. And they're up in Northampton, Massachusetts. And you'll see their logo perhaps down there on the center of the bottom of the screen. But yeah. We seek to buy businesses, and because of my background in the tax and finance and subsidizing these projects and owning a business now, I am now on the private side. We're just a small group of people, small group of investors. Really, we don't take outside investment. We just invest our own money and find businesses to buy. So I kind of am both a private equity investor buying businesses, and I'm also a tax consultant. And
so, yeah. Oh, go ahead.
Go. No, that's it. That's a recap right there.
That's good. That's good. Thank you. So what type of businesses, when you talk about private equity, what type of businesses do you guys usually look at in terms of size, location, industry?
Great question, and I appreciate it. We look at all 50 states, though we're located here in New England, so we probably have a preference for something around here. But we have holdings out in Seattle, Ohio, Western New York near Buffalo. And it's typically industrial companies, manufacturing businesses. We're looking now quite closely at the food industry. But just about anything that is roughly 5 million in sales. We're looking at least 500,000 in profits or above. We would go up to maybe 100 million in revenue. But yeah, so basically lower middle market, family-owned businesses, the type of folks I've been working with for the last 10 years, 15 years. We would love to look at your business and perhaps buy it.
And are you seeing, so with what happened in 2020, we're rolling into 2021, and every guest recently I've been asking about this is, what has the impact been on your business, on the acquisition side of it, private equity side? What have you seen so far? You seen the family saying, I'm done, I need to get out? Or are you seeing that there's more competition, private equity?
So first of all, there's a lot of interest in business ownership, especially at the smaller sizes. So plumbing businesses, chimney sweep businesses, you'll see this on Twitter all over the place. When we're trying to buy a very small business, we're finding that there's a lot more competition right now. And I think it's warranted. It's a really good investment. If you can manage the business well, the valuations are better than what you'll get in the S&P 500 or in any public equity. And a lot of folks are questioning the career track of going on to college, university, spending a lot of money in student debt. You could alternatively just roll that debt into acquiring a business instead. And in a few years, I mean, it's not uncommon to making $4,000 as a plumber if you have a couple of techs working. And that is a completely valid career path compared to like Wall Street, where you'd be at a desk working 20 hours, well, not 20 hours a day, but 10, 12 hours a day.
Yeah. Oh yeah.
So there's a lot of interest in people buying these types of businesses right now. However, I don't see a lot of business owners stressed to sell. I think a lot of owners were looking at COVID-19 and realized or thought in their own mind, I was making 2 million in profits last year. Now I'm making 500,000 this year. I'm not going to sell my business for a quarter of what I would have last year. I'll just hang on to it for another year or two and wait for the market to come back. And so there haven't been many COVID deals, so to speak. I know a lot of folks are looking for that, but unless you're in an industry specifically impacted by COVID-19, I haven't seen businesses really be forced to sell.
Okay, that's good. That's good.
Yeah.
So when you brought up a good point with, you graduate high school, you're in industry, whatever that professional trade or industry is. And I could see that people saying, why am I going to spend all this money on college when this is my life? You go into the trades business, and that's what they know. What is a college degree going to bring you if ultimately you are going to be the owner? You're just you're creating a shorter path by getting into the trade and buying a business. It makes sense. It truly makes sense.
It absolutely does. And I'll share this. I don't necessarily want to increase the competition looking to buy businesses for me, but it's out there. I was in Midtown Manhattan, 30th floor of, one of these skyscrapers, and there's managing directors all around me. And they're making like, say $1 million a year, which means half of that goes to taxes. Then another few hundred goes to parking and apartments and private school for their children. And look, you do well, but if you make $1 million, you might get 200,000 you could save at the end of the year, which is, believe me, for folks who are not business owners, that's a lot of money. And I'm not trying to downgrade that at all. But that's only the very top of the finance industry in Manhattan. Yet my clients were folks who had maybe gotten a high school education, and were pouring concrete 20 years ago next to somebody who put in precast cement in the house next door. And one of my clients, John, says this, he's like, I looked over at him and thought, I'd like to do that too. Now he owns one of the largest cement manufacturing companies in Southern New Jersey. And he's doing very well, much better than Wall Street career would have given him. I think he's got a high school education. And I've seen that in clients who dig clams out of the ocean and the Atlantic off the coast of New Jersey, others who basically slice vegetables and put them in packages, and they end up on the shelves of Whole Foods.
Yeah.
Owning a business is probably the best path to wealth, I think, in the US of any other that I know of. It's hard, but buying a business can be a great way to start off at the 50-yard line instead of in your own end zone, if to use sports speak there. So anyway, I'll parlay that into this. I wanted to, having business owners, I'll say this about the business owner community. You're the only people, I think, in the entire economy that are thinking long-term. When I was with a consulting firm and I was serving, my client was a middle manager at some company. They were just trying to build a resume, in order to get promoted or make their numbers work for the end of the year so they could get a bonus. And without fail, within 5 years, they've moved on to another company or another role. And yet a business owner, you're thinking about your adult children. I have been in many meetings with families where their dog is running around, their grandkids are there the family's working in the business. And now you're consulting with someone not about their resume, but you're actually helping them make a long-term economic decision that makes sense for the family. And that's a very different owner rather than principal agent problem. It's a very different kind of conversation. And that's one reason why I put that white paper together. Like, what would they want to know if you're selling a business? What's gonna result in you having the most cash in your pocket, or the ability to do what you want to do next, if it's retirement or buy another business. And certainly I've got, I'm a tax consultant, so I've got my motives in this, and I also buy businesses, so I'm sure I'll get calls along those lines. But I wanted to put something together that people look at, read, and go, you know what? I'm going to think about taxes when I go through this process before I sell my business, not at the last minute when I do my taxes at the end of the year with a CPA.
So let's get into the paper, because it has a lot of great points. And again, I feel like sometimes the business owners are given bad advice, or even worse, no advice on the right steps. So from the perspective of a business owner that's looking to retire, and the kids don't want the business anymore, there's no real business succession plan. Now they're saying, okay, I need to retire. I built up this business. What are some of the strategies that you could say, without referring, let's not get into the details of the paper, but just from you personally, what do you think are some good strategies to be considered, and how do you retire off of the sales proceeds?
Yeah, that's a business owner who wants to retire. The process is significantly more complicated than an employee who just puts up a 2-week notice and leaves and retires. So when you're talking about tax mitigation, you really have 3 strategies that you want to keep in mind at all times. The first is avoid a taxable event, or defer recognizing a taxable event.
Mm-hmm.
Second is defer paying that tax. If you do have a tax liability, and it's going to happen, you want to pay that as far away as possible. 2 years, 5 years, 7 years. So you just want to push it out as far as possible. And the third strategy is just to reduce the overall tax rate, whatever that looks like. So all of these strategies that I put together in the white paper are all combinations of using all 3. It's avoiding recognizing tax, or avoiding a sale even, deferring paying the tax, and reducing the tax when you do actually pay it. So what's important for someone who's retiring and they're selling their business? You obviously want the highest price you can get. Okay, so that's step 1. But step 2, you want to minimize the tax, or generate a nest egg that you can receive cash flow from.
Right.
And most of the strategies in the white paper work towards that. But I'm going to throw out one that's going to be a little non-intuitive here. One is, don't sell the business. Okay. You're sitting on something that probably has a lot of value. And that's why you're getting phone calls twice a week, emails, unsolicited points of contact from folks in the private equity industry, brokers, whatnot, because you're sitting on a potential gold mine here. You know, when the alternative is you buy the S&P 500 at 25, 30 times earnings, you're probably going to sell your business at 4, 5, maybe a little more than that times earnings. So the value that someone's going to get on a successful business is going to be much greater if they buy from you in the off market rather than a public market. So
Sure.
just know you're sitting on something that's very valuable, potentially. Now, you know the risks, you know all the time you spend in the business, and you probably, depending on your motive, you might want to, you're burned out, you're just sick of the business, or you might have a health concern, or want, you know, it's nice to take a summer off, and you maybe haven't had,
Oh yeah.
despite your financial ability, you maybe haven't had a time to take 2 months off and just leave your phone and internet, email, and not worry. But if you can not sell your business, you don't have a tax liability. So just think about that. Second, if you can install management into the business that can run it for you, that's a great solution right there, because that's what I would do if I were to buy your business. The first thing we do is we think about, well, who can run this? We're not going to do it. We're not I own a food processing business, but I don't know the industry actually much beyond what I've learned from my client.
Right.
So if you can find someone to run your business for you and maybe reduce the amount of effort you put into your business, that's going to do 2 things. It may free you up to do what you really want to do, retire or whatever. It may allow you to spend time on doing the things you like doing. For example, one of my clients was a fish importer. 2 older gentlemen in their 70s, maybe early 80s at this point, just liked getting on the phone at like 4:30 in the morning and negotiating shrimp prices with Thailand. And they did that, and then they got off and play golf the rest of the day. They liked it.
I like that.
Yeah. So if you can do that, you're going to get more money from your business if it's successful. If you can find someone that's a successful transition, it takes a couple of years, but if you can do that, you'll get more money and provide a greater cash flow for your retirement than you could by selling it, bar none. Another way you could take a lump sum out of that is just take a big loan out against a business. Let's say the business has $1 million a year and profits. You might be able to get a bank that'll give you a $2-3 million loan, provided you don't have a personal guarantee in that, and it's just the business, and you're willing to risk the risks work out. That loan that you get from the bank to you personally is tax free. You can walk away with that. And I don't write about that specifically in the paper, but I do reference not selling. And full disclosure, I don't make any money. Nobody makes money. Very few people in the advisor space are going to make money if you hang on to your business and do that. So you're not going to get that very often, but it is worth looking at.
So these points you're giving, and this is what I like about you and your approach to businesses, is it's not what's in it for me right away. You're eventually going to benefit in any transaction that happens, but you're approaching a business owner or client with what's in it for you first. What is the best approach for you as the owner? And then grow that relationship.
I hope so. The amount of money that we're talking about here and the lives of the people that are impacted.
Mm-hmm.
You've got, very typically, you're talking about a couple that mortgaged everything they had in the 80s to start a business. They took a lot of risk. They've put in years of work, and it matters tremendously to them and their adult children and their grandchildren how this transition happens. And most wealth that continue, you can't, I mean, I might make a buck on it, but it means $10, $100 to them. So the advice, it really has to focus on you and what makes sense for you. And I mean, look, I hope to find businesses to buy. I hope to get involved at some point, and I'll earn money. That's not a problem. But if you just can't sit across from a family and give them advice that is wrong. I just haven't been able to do that. And
Good. Keep that path.
Leave it at that. So, you're sitting on a gold mine, and it's potentially, and I think you need to be aware of that. Now, a lot of people are not going to pay you 5, 6, 7, 8 times earnings, but what I hope to be able to do is give you some advice that'll help you sell it, manage it, or at least avoid taxes and get what you want. So, go ahead. I don't know if you have a question to follow up.
Yeah. So what size businesses are you helping? And I know you said that from the private equity side, what size businesses, but from the tax consulting side, you're giving this advice, this guidance. Is it any size business, like a 2-person consulting firm? Where does it make sense to even reach out to you?
Yeah. So there's two extremes. I just proposed so I found a CNC machining shop in upstate New York that we were looking at buying. It would have been a bolt-on to one of our existing businesses. And it's well below the price numbers I gave you earlier. We would have probably spent $500,000 to buy the business. If I had given that owner $500,000, they might have paid a 30% tax rate on it in upstate New York with capital gains and New York state tax.
Yep.
An alternative is to use a structured sale. So that's the third strategy I have here in my white paper. With a structured sale, we're going to come to you and say, hey, we've got $500,000 here. We could give it to you right now. And this is a small example. I'll talk about a larger business after this.
Mm-hmm.
I could give you $500,000 right now, and you're going to get what's known as constructive receipt. The IRS will deem you to have received that money and been paid for your business, and they're going to want their taxes. So let's say it's 200,000 or 30%, whatever. It's not quite the same, but 30%, they're going to want that in taxes. And you're going to be left with 70% of the sale going forward. Well, if you put that into a stock and bond portfolio, it's going to generate 30% less than 500,000, the whole thing.
Right.
So an alternate strategy here is to use what's called a structured sale. Well, we'll take that 500,000, we'll invest it into a stock and bond portfolio, and you can use your own investment manager, however you want to invest it. We'll put it into that investment vehicle. It will then grow over time, and we may give you 100,000 a year for 5 years. Well, $100,000 a year is with the standard deduction of 24,000, I think it is at the federal level, you've effectively eliminated federal tax sale at that point, because $80,000 and less of gains, you have a 0% rate on for a married couple in the U.S. in federal taxes.
Right.
Now, they'll tax you a little, and there's still some have to pay on that structured sales notwithstanding. You can effectively eliminate the taxes on your on the sale from 30% to about 5 or 6%, or even much to 1 or 2% if you're in a zero tax state like Florida or Texas or something like that. So on the end, you could use that structure, and there's some issues I can get into about how to constructive receipt, how that money needs to be invested. But overall, it works if you have a buyer who's willing to structure the sale with you on that. Now, that works for sale. A structured sale can work for up to amounts of about $5 million per owner. So if you have a married couple, they each could sell $5 million to the business in, say, December. And then in January, they could sell another $5 million each. So it's $5 million per owner per year. So if you time it right, you could sell about $20 million, maybe a little more if you have a trust that owns $5 million. 20 to 30 million is what you can do if you're selling your business over a course of 2 years.
Yeah.
If you get too much larger than that, the IRS will penalize you on a structured sale and apply interest rate or a penalty on the tax didn't pay. And to avoid that, you really can't. You got to get cute. It limits the effectiveness of a small business. Now, I've gotten calls from business owners with 30, 40 or more million of capital gains to invest from the sale of the business, in which case structures like the opportunity zone are really, really good, because you could put $1 billion with a B into an opportunity zone structure and not pay taxes until 2027. You'll get a reduction on the taxes in 2027. And then any future capital gains or interest that you generate from the rollover investment are untaxed. And another one is an ESOP, employee stock option plan. So I can get into all those, but yes, there's different strategies that work well for smaller business sales and ones that work almost exclusively for very large sale proceeds.
So, Adam, when you're talking to on the private equity side and acquisition side, you also have in the back of your mind the tax consulting side and the advisory side. What types of clients are you looking at? I assume it's the same industries, same clients, because they should overlap. Is that accurate?
Yeah. So first of all, if I'm buying your business, if Ventoux Industrial Holdings buys your business, I'll be on the front end working with you to structure the sale to minimize your taxes and to help you do whatever it is you want to do. And I'll work with your advisors. Look, I'm buying your business. Don't rely totally on my advice. You hire a tax lawyer, hire a CPA to help you. But we're here to help I want to be the lowest tax buyer on the market. Okay. I want to be known as the person who's going to help you. We'll buy your business and do it tax efficiently for your benefit. Now, if I'm not selling your business and you're in the process of that, or you're a real estate developer or a business owner, I get involved in specific areas where you're growing or relocating a business to a highly distressed area, like an opportunity zone, or distressed census tracts like new market tax credits.
Yeah.
So for example, a typical client is a real estate developer who's maybe got a 15, 20, $30 million investment. It's in the right location where they might get something like brownfield tax credits, historic tax credits, new market tax credits. And for the uninitiated, basically, these are federal tax credits that the federal government will give to you if your project qualifies. You then get a bank to come in or an investor to pay you cash for those tax credits, and they become a subsidy to offset the cost of the project. And typically, it's not uncommon to have 15 to 30% of a project paid for by these tax credits. And that's my tax consulting in a nutshell right there, as well as just helping business owners avoid taxes when they sell.
Okay. Okay.
I'm sorry if it's, I see like
I just,
the headlights in the eyes, like, oh gosh, what is he talking about?
no, it's
Um,
just so many more questions that I have. And I know I don't want to drone on for hours and hours and hours, but I know it's important. Here's what it comes down to is that if you're selling your business, and I didn't realize this, that I always just assume that when you're selling your business, you talk to your CPA, find the buyer, do the transaction. It's not that clear cut anymore because there are options. And have you seen when you've approached a company that you're buying, have you seen where they have other firms that they're entertaining as part of the acquisition? And are they saying we like you guys because you've come up with more? Is it pretty much a blanket? Everybody knows these strategies and are sharing it.
no,
I haven't heard
no,
it.
not everybody knows it. A lot of CPAs, unless you've specialized in it, don't know it. I've spent the last 3 years researching various strategies, reading statutes, tax law, hiring tax lawyers, hiring CPAs to backstop the information that I've provided, talk to business owners. I've gone as deep as I can. I've put I have a degree in physics.
I
Believe
saw
me,
that.
I realized really soon that I'm not PhD physics material, but I do like learning. And taxes can be boring. Believe me, I am not good with an annual, like filing my taxes. I have a CPA do that. But when you're dealing with an opportunity to save someone $1 or $2 million in tax, I get really interested all of a sudden. Like that's
Yeah.
life-changing money. That can go a long way. And so it becomes boring and mundane, becomes really interesting. And I like combining things. So here's an example of a very creative one that I don't know if you're going to see this anywhere else. It's let's see, strategy number 4. Okay, it's post-sale consulting with a defined benefit plan. So this is a
Okay.
creative structure that I kind of noodled out a little bit, and I think it works pretty well. It's for a smaller business. So let's say you're a business owner. You've got 30 employees, and you maybe make $1 million a year in profits at the end of the year. You would like to take that $1 million and maybe put it into a 401k or an IRA, but you can't because you're limited to like $18,500 or maybe $57,000 with certain SEPs and whatnot. You could, however, set up what's called a defined benefit pension plan. It's a pension plan. If you heard the term pension plan,
Years ago.
you're familiar with it. It's a company is saying, I'm going to commit to giving you a defined benefit in retirement, as opposed to a defined contribution plan. A defined contribution plan says, I'm going to put $18,000 per year, defined 18,000, and that's going to be my contribution. And whatever the market gives is whatever I get in retirement. A defined benefit plan says, we're not going to care about, we're going to define your benefit. So you would go to an actuary, and the actuary would say, all right, we're going to figure out how to get you $200,000 a year in savings and income for a married couple, let's say. You're defining the benefit, which allows you to contribute much more to hit that goal. So if you've heard of pension plans being underfunded, well, at that point, the companies then have to start putting lots of money into the pension plan in order to properly fund it. And so what you wanted, if you're an owner with 30 employees and you would want to set up a pension plan for yourself, you could potentially divert several $100,000 a year to your own pension plan, personal pension plan. The problem is you have to offer something similar, or you may have to offer something similar to all your employees.
Right.
And it doesn't financially make sense to offer all of your employees hundreds of thousands of dollars. So a pension plan that's closely held or in a small business like 30, 40, 50 employees doesn't work. But if you have a business where it's just you and your wife, you're a consultant, it works completely fine at that point. You can do
Oh,
it.
yeah.
So here's the strategy. What you do is you sell your business and you say, all right, part of the business is going to be, there's an earn out to this. If you're talk to anybody about selling your business, an earn out is where they don't give you cash up front. They give you cash over time, depending on the performance of the business. And you may stay on to help to transition, do a little bit of consulting with the business. So here's the strategy. You sell your business and you say, all right, for the next 5 years, you owe me $500,000 a year, $2.5 million to consult with the business. Now, instead of being an employee of your business, now that you own it, I'm going to set up my own consulting firm. It's going to be Sterling Point Consulting or Bob Joe Consulting. It's owned by you, your wife, and maybe you have an adult child or so.
Mm-hmm.
And then you say, you're going to give me that earn out in terms of income because I'm going to be in a consulting contract with you. So you're going to give me 500,000 calories. I'm thinking about the holiday here. $500,000. And you're going to take that money and then divert just about all of it into a defined pension plan for you, your wife, and maybe an adult child. And that's tax-free, almost. You do have to pay perhaps FICA taxes, depending on if you have an S Corp or an LLC, or depending on what the structure is. But you get a few benefits. You get the 20% small business deduction. That's tax law. You could pay off a home office. You could pay for health insurance premiums with your business, all the benefits of owning a business and all the discretionary earnings and travel and whatnot for business purposes. You could spend on that tax-free as deductions. You could also take most of that 500,000 and apply it and just throw it into a pension plan, which after 5 years, you roll over into an IRA. And now you've put $2.5 million into an IRA, and it's tax deferred. It can grow tax-free, and you could use it as you would any other IRA. And it's a really unique way of saying, hey, I'm no longer a business owner with 30 employees. Maybe I'm a business owner with 1 or 2. Let me take advantage of some of these tax laws and structure the sale to benefit in that way.
What a great idea. So number one, what a great idea. Number two, it's incredible how creative you can be in order to reduce, minimize, like the title of your white paper, minimize your taxes. People need to get in touch with you. People absolutely have to get in touch with you. Again, selling your business, looking to sell your business. Even on the other side, if businesses are looking, or if people are looking to buy a business, do you work on that side too?
Yeah, I'm thinking of putting another paper together, or at least going out on Twitter, perhaps, whatever avenue I have. If you're buying a business, I think feel free to take the white paper. This is now, no, don't copy it verbatim, but take the ideas. Like, I've copyrighted it, so I do want to make sure
you get credit for it. It's right here.
Lawyer says just copyright it, Adam. It'll help you. So fine. But these are ideas that are out there for you to use. I think if you're a searcher, if you're looking to buy a business, here's how I frame it. You're not really buying a business. You're solving somebody's problem. All right. So if you're a business owner, the only reason you're selling your business is because there's some problem that you're trying to solve. Otherwise, you wouldn't sell your business. You don't like it. You want to retire. You need the cash. You've got a health concern. There's estate planning problems coming up. Most likely, you're selling a little bit against your will, or there's something not working out, and selling the business is a solution to you.
Yeah.
And I approach conversations with sellers and business owners is like, trying to figure out what is it you're trying to get out of this. And it may have something to do with taxes. It may have something to do with money, but often there's other things involved. And I think this is it's a arrow in your quiver. It really, what it is it's framing the conversation and the transaction from, hey, as a buyer, I'm selling you a solution. I want to solve your problem if I can. Yeah. And it may not be me. It may be somebody else, but we're really here to serve you during this transaction and this major life change that you're going through right now.
Yeah.
Everyone involved should be doing this with your best interest. That should at least be a consideration. So you're really in sales. Even though you're buying a business, you're in sales. And if you're selling a business, you're really a buyer of those, and as well as selling. So roles get mixed up a bit, and this is just part of it. Like, what are you trying to do? Retire, roll the money into another investment, do estate planning. Well, let's figure that out. Let's use these tools as a tool to help you.
Yeah. I like it. Okay. Well, Adam, thank you. I generally appreciate you joining me. Again, for those listening and watching, because I will convert this onto the podcast, which is broadcasted globally. you're on LinkedIn, YouTube, or Twitter, and you're watching this, if you have questions, make sure you get this paper. It's on, Adam, it's on your website, right? Sterling
It's on the
Point.
website, on Twitter, on Ventoux Industrial Holdings website.
Okay.
You should be able to find the link. I'm trying to get it out there. So yeah,
Okay.
and if not, just send me an email and I'll get it to you.
Absolutely. Absolutely. Adam, thank you again. Appreciate it. Happy holidays. Or not happy holidays. Happy New Year. I'm still with that, and I'm still into that mode of the 500,000 calories.
Yeah, right. I'm trying to go the other way. Yeah.
Enjoy the rest of your day, Adam. Thank you for joining. And let's see if we can get you back on in the next maybe 3 months, 6 months. Any updates? When you come out with your next white paper, let's get you back on here and get you talking about it again. This is great information. So I appreciate it. And it's a huge value for those business owners that you share this insight. So I appreciate it.
You're welcome. And thank you for having me.
Thanks. Take care, Adam.
Bye-bye.
Bye-bye.